Hello, welcome back to the monthly pyramid portfolio update as of Saturday, August 1st, 2026. As usual, I hope you'll find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands today and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful since it's your responsibility to do your own research before investing. At the end of the video, in today's bonus section, we will talk about another great investor, Seth Klarman of the Baupost Group, and his book Margin of Safety. But first, let's take a look at this month's activity. In July, I added SpaceX to the watch list, made a small purchase, a little bigger than usual but still relatively small. I do not necessarily think it was a good bargain, but it is maybe one of the poster children of the AI boom, and I want to take a closer look at the ecosystem, and what better way than having an investment in it. Again, it is very small, under 0.1% allocation, so even if it goes to zero, it's not that big of a problem. In terms of selling, I did not sell anything, even though I'm watching the Romanian market very closely since it seemed expensive. It was a pretty good month for cash flow, with another big bank deposit CD expiring, and got the principal and the interest on it. I also retrieved 3 dividends from Nuclear, Electrica, Romgaz and the S&P 500 quarterly dividend, as well as coupons from 2 Fidelis Romanian government bonds and the quarterly coupon from the Restart Energy 1 bond. This one is the insolvent company, and it is very nice since I already wrote the investment off to zero. So anything that is recuperated is really just a bonus. That being said, the portfolio as of August 1st is currently looking like this. Please pause the video if you want to analyze each investment in more detail. You can see the SpaceX entry in green at position 33, accounting for 0.07% allocation, and of course you can see that the price proceeded to go down more than 30% in my purchase. Another mention is that you can also see a new entry at line 14, which is actually a rebranding of one of the old companies. Meta Estate Trust became Novere Capital, and the ticker changed from MET to NC, but the rest is the same. As mentioned before, the plan is to get rid of the real estate entries, which are Novere Capital and One, sometime over the summer. Finally, the current pyramid allocation portfolio is this. It is worth mentioning that the value of stock increased due to the Romanian stock market performing exceptionally well, which now seems very expensive. I know I said it looked expensive last month, now looks even more expensive. And a second noteworthy thing is that the cash position actually increased in absolute terms, but it now represents a smaller position of the overall portfolio. We had a good month after 2 bad ones. It was more of a readjustment really, so we're up 3.07% for the month, and year-to-date return is 1.85% plus expenses. Now, before going to the next section, if you are interested in the subject, please leave a like and subscribe to the channel. It really helps bringing this completely free information to more and more people. As mentioned at the beginning, in today's bonus section, we will talk about another great investor, Seth Klarman of the Baupost Group. A Boston-based investment manager with a long-term, value-oriented approach with stellar returns since its inception in 1982. Mr. Klarman, or Seth as his friends call him, also wrote a book called Margin of Safety, so I think we can take a guess of what kind of views he has on investing. What is interesting is that he published the book only once in the 90s, and now a second-hand copy sells for about $1,400 on Amazon. Check the link below, which shows the appreciation people have for his ideas. Of course, you can find the book in PDF format for free on the internet, from my understanding with his blessing, since he makes his money somewhere else, not from selling books. From his book, I want to present to you today a few main ideas and a short parable that I liked. Let's first start with the parable, which is called Trading Sardines, and it goes something like this. There is an old story about the market craze in sardine trading when the sardines disappeared from their traditional waters in Monterey, California. The commodity traders beat them up and the price of a can of sardines soared. One day a buyer decided to treat himself to an expensive meal and actually opened a can and started eating. He immediately became ill and told the seller the sardines were no good. The seller said, "No, you don't understand. These are not eating sardines, they are trading sardines." This is the team of investors versus speculators, and just like the sardine traders, many financial market participants are attracted to speculation, never bothering to taste the sardines that they are trading. Speculation offers the prospect of instant gratification. Why get rich slowly if you can get rich quickly? Moreover, speculation involves going along with the crowd and not against it. There is comfort in consensus. Those in the majority gain confidence from their very own number. There are many interesting ideas in this book, and you can find many summaries online, like the one in the link below, but here are a few lessons that stood up to me. First, gone are the days, if they ever existed, when a new issue was a collaborative effort in which a business that was long on prospects but short on capital could meet investors with capital in hand but with few good outlets for it. Today, the initial public offering market is where hopes and dreams are capitalized at high multiples. While written over 30 years ago, this still rings true in the AI era, SpaceX being the latest example of that. The next lesson is that investors must never forget that Wall Street has a strong bullish bias, which coincides with the self-interest that they have. Wall Street firms can complete more security underwritings in good markets than in bad ones. Brokers, likewise, do more business and have happier customers in a rising market. That is why most of the recommendations are to buy or for the price to increase and not to sell. Next, the attractive historical returns that draw investors to a particular type of investments may have been achieved before the category was identified as such. Seth gives the example of bonds, mainly junk bonds, but we have the same example now with Bitcoin returns that are flaunted by its supporters, but the truth is that it is very unlikely to get the same returns you got if you bought it when it was a few dollars or even cents. Next, don't feel compelled to be fully invested at all times. And the corollary, no investment should be considered sacred when a better one comes along. There are three central elements to a value investment philosophy. First, value investing is a bottom-up strategy entailing the identification of specific undervalued investment opportunities. Second, value investing is about absolute performance, not relative performance oriented. Finally, value investing is a risk-averse approach. Attention is paid as much to what can go wrong, the risk, as to what can go right, the return. There are many more interesting ideas in the book, so I can't recommend it strongly enough. In closing, remember that Seth is still an active investor, so you can check out his portfolio, which is updated quarterly per SEC rules, on websites like Dataroma that publish the updated portfolios of famous investors. Anyway, that's it for today. Thanks for watching until the end. Please don't forget to like and subscribe. See you next month. Bye bye.